You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, listeners. Man, we're packing a lot of living into the show already. We got all of last year. We got this week's stuff. Got a bunch of complexes. Rounding it out here with energy. And if you're wondering, is it a hot week in crude, given all the headlines that kicked things off over the weekend? The answer was yes. WTI hanging out 58 1/3, up net about a point since Monday, or about 1 3/4%. Obviously, when we talked about our movers for the year, crude was one of the downside movers for the year last year, but putting up some numbers this week, 763,000 contracts on the tape. So starting to rival nat gas in crude from a volume perspective. If you're wondering where the lion's share of that action is going up this week, it's in the Feb contract that has only 6 days to go. So very near dated paper. Then again, it's hard to blame them. This stuff is very fluid right now in terms of the geopolitical scene and its impact on the energy market. So about 40% of that flow going up in the Feb contract that has about 6 days to go. Carley, it's been an interesting week on the energy front. Maybe not quite the response people expected once they started realizing, hey, there's a lot more to it than just turning on the spigot in Venezuela. They have to do a lot to make that spigot work again. But outside of that, I know you have some energy folks over there at DeCarley. What have they been up to, and what are you seeing in crude this week?
So you're absolutely right. I mean, the supply that we get from Venezuela is highly uncertain, and when we do get it, it's going to take a lot of time. So it's hard to put on a short-term trade based on anything that we're seeing here. That said, we can't ignore the fact that crude oil has been in a bear market for 3 years, well, since March of 2022, and we've seen a total of 4 bear markets in crude oil in the last 20-something years. The last 3 did not end quietly. They ended with massive capitulation sell-offs that kind of put us in a situation where the selling was so severe and so quick that nobody in the world wanted to buy oil. Case in point, 2020, when the market was actually paying people to take oil in a few certain instances. So anyway, my point is, the oil market has never bottomed out quietly, or at least it has in the last 20 years. So maybe this time is different, and maybe it will. But if history is our guide, we probably should see a big wave of capitulation. And ironically, those capitulation moves over the last 20 years have occurred mostly in January, February. In 2020, it was more like March, April. But again, the first part of the year is kind of a danger zone for that sort of thing. So I wouldn't sell futures or do anything crazy like that here at these prices, because we're kind of banging on the door of support around 55. But I do think at some point we collapse to around into the low 40s. And believe it or not, if we repeat the pattern that we've seen over the last 20 years, $20, $15 crude oil is not impossible. So I'm not saying it's absolutely going to happen, but I'm saying we should just be aware of such a possibility. And we're kind of doing the similar thing with our clients as we are doing in the S&P. Very low risk trades, limited risk trades, for example, buying December puts in crude oil way out of the money, like at strike prices that nobody thinks is possible. Buying June puts at very low strike prices, spending a very small amount of money, and it's a binary situation. Either it happens or it doesn't. But if it happens, you can get a lot of leverage with a very small amount of risk. And so that's how we're playing it for now.
You're turning into a put nibbler on me. You used to be the upside vertical and bullish risk reversals. Now you're just gobbling up all the puts in town, Carley. Interesting. Yeah. How the worm turns to start the new year. Let's see how that worm is looking really quickly here in WTI list. Like we said, a pretty active week so far for obvious reasons. Hanging out right around 58 1/4 in that future when we kicked off the show. Again, puts it up about 1 point from about Monday when we saw all these headlines really hitting the markets. Like we said, 40% of that going up in the Feb contract has about 6 days to go. And the active contract out here are the double puts. By the way, 41 vol, what we're seeing out here in the Feb contract. Again, vol getting kind of spicy right now. It shows it up about 14.5 points. Again, vol with only 5 days to go, 6 days to go is kind of a silly metric. Let's go a little bit farther out. Let's go out at least a couple of weeks. If you go out about 2 weeks, listeners, that contract, that vol is at about a 35, 36, still up about 9 points. So obviously there is more vol right now in the crude space for obvious reasons. Just maybe don't get alarmed by some of these numbers you're seeing in the contracts going out in a couple of days. Skew-wise, kind of wild as well. The Feb contract has 6 days to go. The puts last week were 10.3% discounted. They are flat right now. The calls were 18.8% bid and flat this week. So, wow, they were pricing in some serious skew over the course of the past week, and most of that is gone right now. It's almost as if someone was expecting something to go on in the energy markets to kick off the new year, listeners. In terms of action, it is the double puts expiring in February. They've changed hands about 35,000 times already this week. Looks like the big day was actually yesterday. Paper bailing on about 16,000 of them. 6,500 trading today against an OI of about 15,000. So there's still 15,000 left of these things. 7,800 on Tuesday. Looks like paper was bailing on them then as well. And about 4,600 going up on Monday. Looks like they were opening there. If you're wondering what's a double put with about 5 days to go going for right now, still going for about 37 cents today. So they're not giving these things away. So would you be comfortable? Carley, is that a strike you would nibble? I know you don't like a lot of 6 day to go trades, but would you be a seller?
Right.
Would you draw that line in the sand at the 55 level?
55 is a very important number. If we like I've mentioned a couple times, we've kind of been knocking on that number, and we get buyers every time. I suspect there's going to be a time in the near future that we don't get the buyers we're looking for, and the market kind of collapses. So, if I were going to take a shot on the next 6 days, that'd probably be where I'd play it. But then again, that's not really something I would do. But if I were, I think that's a good play.
A little nibble, 37 cents. Carly's buying all the puts. Why not buy those as well, Carly? Just add them to to the gun there. See what fires off as we keep firing off into a little bit of farther off paper. And I know not everyone lives in 5 or 6 days in crude. Let's go out a little bit farther, see if anything else is lighting up the tape. It looks like the March 50 puts also pretty active this week. So a lot of downside, kind of getting back to what we were saying earlier. The initial headlines were, is it interesting for crude? And now, of course, thinking maybe this stuff can't come online for a little bit. 40 days to go is how long March has for expiration. And these 50 puts, again, changing hands, I should say, about 17,000 times. The big day again, Wednesday, 7,800 on Wednesday, mostly opening there. 4,300 on Monday, slightly closing. 2,500 each pretty much Tuesday and today. I don't have prices on these March 50s. Let's look really quickly. I don't have prices. I had the Feb 50 puts, no March 50 puts on here, but interesting stuff nonetheless. So a little bit longer term downside, a little bit farther out of the money. Maybe that's more up your alley out here, listeners. And then just for fun, because someone's got to play in December, got 2,000 of the D65s going up, listeners. Does that float your boat? Hit us up. Let us know.
It's time to break down all the action that's lighting up the futures markets this week. What's limit up and what's crashing and burning? Let's find out. It's time to enter the trading pit.
Dan, I know you want to talk about energy in the time we have remaining. Obviously, some wild stuff going on the crude front as a result of the weekend. What's been catching your eye, sir?
Well, I think crude oil, the point is crude oil is doing right now what it should do. We have plenty of supply globally. And people keep talking about Venezuela, that it's going to have a dramatic change. I don't think so. And here, the reason is, if we just take a second and look at the evolution of Venezuela. First, it was a country that was incredibly prosperous. Does it have the world's largest proven oil reserves? Yes. But there's some issues there. But yes, it does. And if you look at the 20s and 1920s, they started to develop it. If you look at the 1940s, major players, US, Dutch, uh, England, they all came in and started, these oil companies really started to ramp up the production capabilities of Venezuela. They got up to about 3.5 million barrels a day. They were cooking. Then 1999, Chavez was elected. By the way, as a side note, Venezuela was one of the cornerstone countries in the formation of OPEC in 1960. So they were around when that organization came to being. But in 1999, we have Chavez getting elected. And in 2002, it was a critical, I believe, a turning point truly for Venezuela on crude because they had a strike. They fired 18,000 people. Now, along with that, it's the technology, it's the skill level. You know, producing crude oil is not easy. The tech part of it is a huge part of it. And that knowledge went away. So not a good thing. And the result is, if you look at their systems, if you look at what they have, it really did deteriorate. The only, I think, bright spot when I think of Venezuela is Citgo. Citgo, you know, we used to have Citgo stations all over the states, and that was their distribution arm for their product. So I think Citgo has some potential, and that's where the focus should be to begin rebuilding for that country. But they were at 3.5 million. Today, they produce about 800,000 barrels a day. So less than 1% of global supply. That's why you're not really seeing the crude oil market responding, because for them to get up to speed, and it would take, you know, years, maybe 5 to 7 years for them to get up to 3 million barrels a day. Could they increase it a bit towards 1 million? Yeah, maybe in about a year, year and a half. Trump has said, well, oil companies, they'll come in and they'll start working on it. There's one other thing that happened in the past. And if I was an oil company, I'd be thinking about that today. In 1976, when things were going well in terms of production, Venezuela nationalized oil. And when they nationalize it, it now becomes owner is the government. So all those oil companies that had investments there, they said, by the way, your stuff is my stuff. And we saw that in Iran. We've seen it in Saudi Arabia. Can it be done? Yes. But it went from a technical product to a political product. And that also, I think, hurt their ability. But let me ask you this, Mark. You and I right now are an oil company. I understand Trump is saying we should go there and invest. Do I want to put billions of dollars in there right now? Well, one, it's going to have to be a different agreement. Their NOC, their National Oil Company, PDVSA, needs to be a sharing arrangement. So, and Trump hinted towards that. So we need to see a change there. If we don't see that, forget about it. Venezuela is not going to become a player in the global marketplace. If that happens, and I think they have a chance, but it's going to take a few years, that's going to be the big deal for it. And I hope and pray that it does happen, because that'd be good, as Trump has said, for the people of Venezuela. The potential there is tremendous. One last point, and it is the quality of crude oil they have. They have heavy, sour crude. It takes extra processing to process that. We have that capability in the United States. Citgo has refining capabilities for that. But when you compare that and people say it's like Saudi Arabia, it is not. Saudi Arabia is light and sweet, like a lot of our production in the United States. So there's a lot of things. You know, you can produce it. Does anybody want to buy it? That's the other thing. And if I buy heavy sour, I got to be able to process it. And that would mean United States right now. So just a few thoughts to keep in mind. I think that Venezuela is in a very precarious position. It's not going to turn around as quickly as people expect. And we're not seeing the crude oil market respond to it because it shouldn't. And we have a lot of supply right now out there with more coming online. So I just wanted to mention that.
That's important stuff. A lot of people were wondering why we didn't see, you're right, the more immediate response in crude prices. And we're also hearing, as you pointed out, a lot of the infrastructure issues that you mentioned. It's going to take a lot of investment to really tap into some of those resources. It's not just as easy as swapping the guy for a gal at the top. They have to do a little bit more work behind the scenes to actually make the crude flow.
You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.